Hello, welcome back to stage 2 here at FinTech LIVE London 2024 for the Financial Services Forum, and it's a real delight to introduce our expert panel here. Steve Round, President and co-founder of SaaScada, Russell Fisher, COO of Admiral Pioneer, part of the Admiral Group, Dan Tika, Chief Exec at Lynx, and Benzi Aviv, Global Head of FinTech Solutions at Amdocs. Gentlemen, all welcome. Thank you very much indeed. Looking forward to this conversation. Look, let's kick off just by talking about emerging trends, because you all come from pretty different sectors, really. So what are the emerging trends in financial services as far as FinTech is concerned? The things that are exciting you right now. Benzi.
I would say what we are focused on is personalization first.
Wow.
It's the understanding that customer expectation changes over time. It's the understanding that eventually you think you need to take a role of bank. We expect banks to take a role of a trusted advisor, understanding the wishes and needs of a customer and individual, and acting accordingly. So rather than just working with the typical segmentation, the approach of you're a student, you're a pensioner, and then linking every aspect of the banking service that you get to the segment that you belong to, we rather look at it as a segmentation of one type of an approach. The understanding that people have wishes, needs, they have different stages in life that needs to be reflected in the way that the banks would treat them. And this is what we're passionate about. And this is what we focus the approach, the solutions, and the way that we engage with our potential partners.
And what gaps are there that you see that need to be fixed? What can we look forward to?
I think first it's the understanding that, I'll be a little bit blunt here.
Okay.
When you interact with the bank, often enough you get different experiences linked to the different products that you'll be looking for. So if you look at yourself as a potential or a bank customer, the experience that you get on the deposit business is completely different than the experience that you'll get on the mortgage side. And it's different than the experience that you'll get on the insurance side and so forth. So while the will to personalize the experience and help customers as a trusted advisor, the reality is such that the experience that you get from a bank typically is different. And it's actually based on the technology that is used to support the specific line of business. And that's something that we are passionate about evolving, revolutionizing, and changing. But I think what we focus on is the first understanding of the expectation, and how can we leverage technology, and how can we modernize technology to reflect the wish and the expectation of personalizing the experience and becoming a trusted advisor of the customer.
Okay, thank you. Steve, SaaScada obviously provides a core banking service. Do you want to pick up on that and move on to the trends and things that excite you?
Absolutely. I see I didn't get the memo on the dress code, but there we go, we'll move on. We as SaaScada, we build cloud-based banking platforms around the world. For me, a bank that believes the only relationship they will have with their customer is transactional will die and fail. Data, for me, is the most important part. But how you use that data is really important to me, about inclusivity. You asked about one of the things changing. I think a lot of the banks, technology enables us to offer more products and services to more people. My background, having chaired the big issue for a long time, is that we as banks and fintechs can do an awful lot more about giving access to financial services. And technology enables us to do that. And the data that fintechs can bring into banks can help us do that as well. For me, the challenge for all banks is how do you use that data effectively that actually will support the consumer and their client. Vulnerable consumers are, we're all hit by regulation on when is a vulnerable consumer vulnerable? Well, when they're vulnerable. But how can we use the data to ensure that we can support them in that? So I think, for me, banking and our drive at SaaScada is to provide banks with the transactional capability, but also the data to personalize, but also to open up banking to a broader audience, because I think it is part of every human right to have access to high-quality, good financial services at the right price.
I risk going off down a completely different direction here, but this is fascinating because how much does the industry actually care about marginalised people? I'm winding you up here, Steve, and pushing ready to go. How much does it actually care? Its products, are they actually, and the innovation we're seeing, are they actually geared up towards people who are marginalised or who don't feel included by the march of technology? And that could be just ordinary older people in societies?
I think individuals within banks do, but I would suggest that most banks don't. It's just down to capability, cost, and profitability. The challenge for most banks is how do I deliver products and services into this particular market rather than here. And I think the challenge for the banks generally is why the hell should we do it? My view is very simple. You can change the banks I believe don't have the best reputation in the world for changing the world. We as fintechs can help them because the World Bank tell me there are 8 billion people in the world and 1 billion don't have access to financial services. If you turn that round, that means 7 billion. We are touching 7 billion people. So what are we doing about that as banks? And I think fintechs can support that by reducing costs of transactions, by reducing cost of managing it, and therefore giving first-class products to a range of people that they wouldn't do before, because you can still make money. I'm not saying that banks should be unprofitable. You need profits to actually sustain your capital and actually put into investment.
And I guess in fairness to the entire industry, fintechs and the revolution in banking has actually embanked people in developing countries, hasn't it?
Yes, very much so. And I think, we seem to have this challenge that we want fintechs to challenge banks. I mean, for me, the next stage is banks working more in an ecosystem way with fintechs to support their own business models, which can take the transactional cost an awful lot lower. So for me, I think it's not competition necessarily, it's collaboration.
Sure. So Russell, the insurance industry, what are the big emerging trends that you're seeing at the moment that excite you?
Excellent. I should introduce who we are. So it's always quite interesting. If you live in the UK, who here is a customer of Admiral for either motor, pets, travel?
There's some hands going up, yep.
Thank you all very much for your custom. For those outside of the UK, Admiral is a major insurer in the UK, predominantly based around motor. We've actually only existed 31 years, so we call ourselves a very successful scale-up. We're proudly Welsh, despite being found by an Englishman and an American, and based in Cardiff. We've never really played the London game, but we've become incredibly successful doing a few things well, particularly in a few lines of business. And even in 31 years, we've realised perhaps we have become perhaps what we set out to disrupt. We've become the establishment. We have many million customers now. We're not quite as pro-risk as perhaps we were 25 years ago. So Admiral Pioneer is part of the Admiral Group. So we're a standalone business, and we're what's grandly called a corporate venture studio. So we are a business that builds businesses, and we exist to help Admiral diversify away from its traditional business lines, be that customers, products, markets. So we were created 4 years ago, and our number one ethos is all about customer. We start with customer. I think I'm relatively new to financial services, but I think the industry has traditionally been quite product-led. So we create really clever products that we think serve a need, and then we work out who we're going to sell them to. We take a very different attitude, because we say we start with the customer. Let's understand the customer we want to work with. Let's understand their lives and how we can potentially help them in their lives. So it's a fundamentally different starting point. And I think we can see trends that are talking to that. So I'm a customer of both Barclays and Monzo. And there is no doubt my experience at Barclays is significantly better because Monzo exists. If it didn't, I would probably still be banking in the way I used to. And I think that's what's really exciting. Customers' expectations are what really we should be trying to meet. And they're not just set by the Barclays, Monzo direct competitors. Customers now expect from financial services companies the service they expect from Amazon. I mean, I get furious if I can't have next day delivery on things. I get furious at old-fashioned IVR. And that's not the banking industry's fault. That's set by my experiences elsewhere. So we find that hugely exciting. We think there is huge opportunity in that space, but it's all got to come from understanding your customer and their lives and how you can play within those.
Which brings us back to your point, Benji.
Yeah, just to point to that, because to give an example that relates to that, we tend to think, how do I sell a mortgage better? Right? That's the product-driven approach. But the experience, people don't look for a mortgage. They want to buy a house.
Yes.
The mortgage is the enabler, so the experience itself starts from them. We actually did the research on that and figure out that a user story for a mortgage product starts with a person going to Google and searching for a school for his kids. This is where the experience starts from. It doesn't start with them coming to a branch and asking for a mortgage. It starts way, way before that, when they search for a school, and then they search. Understanding that it's all about the experience makes the difference. This is where personalization starts from. It's understanding that what the customers are looking for is a house. So how do I accommodate that? How do I help them with the products and capabilities? Eventually, it ends up as a mortgage, of course, but there's a process to reach that. And that's the difference between the experience and the product-led
And the customer doesn't celebrate getting the mortgage, they celebrate getting the house. Yeah. And that's where you need to be with your customers.
Yes.
Yeah.
Dan, I'm going to come to fraud and matters affecting your company directly. But let me just pick up on that. You talk about the fact that it's about the guy who looks at Google to find the best school for his family way before he gets a mortgage to buy his house. How then should products be addressing that first step in the journey? How do you tap into that?
I think it starts by understanding that you need to analyze the experience itself. So when you look at the deposit account, when you look at a loan, when you look at a typical product, you always need to put it into the context of what is the experience. It's always a subset of an experience. We tend to think that the product is the focus. It's not. It's it's the enabler to reach, because people open deposit accounts because they want to finance education for their kids. They will open a deposit account because they want to buy a car, they want to finance a vacation. But that's where the experience starts from.
Yep.
It's the understanding that this is a piece of a puzzle. So we invest a lot into putting in place even behavioral psychologists to figure out what is the experience. So we tend to think that everything can be solved with technology. This is where the product-led approach comes from. It's the understanding that I'll fix the product, I'll find a better way to sell a mortgage. If you look at it from an experience, you start thinking, who are the people who should be involved in analyzing the experience? And how do you link that into the way that you build your technology? And this is where you make the difference. Understanding that, analyze the experience, fit the product to the experience.
I could have planned
And
this.
not vice versa.
And that moves us nicely into looking at people's behaviours, Dan, which is what your company, which specialises in analysing fraud and helping protect companies and individuals from fraud. Maybe tie up there and talk about the emerging trends and technologies that you see.
Absolutely, thank you, Tim. So I come from Lynx. We're a company specialized in artificial intelligence software, building models, self-learning models for financial institutions around the world to combat fraud and financial crime. We've learned from our customers around the world that probably, to summarize it, I'll put it in perspective here. For us, from our perspective, there are three key trends that we see around the world. One is obviously real time, and Steve and Russell, everybody, we touched upon our needs today as customers. We want faster payments. We want everything. We want real time. We want the bank to respond immediately. You don't want to be on the phone waiting for the call center. So the financial sector evolves. It's all about real time response, and that's what we do, helping banks provide a score or a look at a transaction in 25 milliseconds, we can decide whether that's fraudulent or not, removing that friction. So the second trend that we see is obviously the role of AI and machine learning. This is not new. For instance, we've been around for 25 years. In 1995, the founders of the company were toying around with machine learning models. I was playing with a 365 compact, I think. But this is not new. So for 25 years, we've developed these machine learning models that actually analyze customer behavior and understand and isolate unusual behavior to reduce friction. You don't want your card blocked for a $1 transaction where the hotel takes just a $1 minimal charge. Immediately, some of the banks today would block your card because that's qualified as an unusual transaction. So if you don't have smart systems today, you introduce a lot of friction. That affects that customer experience. And that's exactly what the challenge, coming back to trends and challenges, where we see challenges, the banks are trying to get that balance right between customer friction and security. The more security you have, the more friction you have. The less security, the more fraud you have, the better the customer experience. So how do you play that, right? You have to let the gates open so that you don't increase friction to the customer. Customers will move for that. I moved banks because of that. But at the same time, you have to understand very clearly what is your risk appetite.
Yeah, but I don't think friction itself is a bad thing. So in insurance, we spend a lot of time trying to make the purchase process easy, so trying to fit the right product to the right customer. But if you're unfortunate to have a claim, You really do not want to be going to an IVR system. You do not want to be talking to a dumb chatbot. Right, you want to speak to a customer because, you know, people have life-altering injuries all the time, and it's a terrifying experience. And really what you want to do is speak to a human, and the human to say, it's okay, we've got this, we'll take it all. You know, so I think friction, my worry is with technology is just because you can make things quicker, you probably shouldn't. You should start off understanding, okay, where's the customer at that time? And when a customer wants to speak to somebody, make it really easy for them to be able to speak to somebody, and get rid of the
I think the challenge for banks, financial services industry generally is, I suppose it's the disintermediation of financial services anyway. You know, most people have a transactional account, let's call it a current account, and they'll look at the best deal and they'll do it, fine, great. They'll then look at a deposit account, well, they'll go first, Money Savings Expert, MoneySupermarket.com, look at a comparison site. You talk about mortgages, I mean, in the UK, 94% of all mortgages are driven through brokers being individuals, but also comparison sites. So banks are not even in control of their own customers. Acquiring a customer is relatively quite easy. Do it on price or product, great. Banks don't make any money on acquiring a customer, it's retention. And that's, I think, the challenge for the financial services industry going forward. How do you balance the retention? Because I go back to the point, if you think it's a purely transactional relationship, you give up. So how do we as banks, or how do we as FinTech support the banking industry to actually retain customers in all those different segments? Because, you know, we have open banking in the UK. Most people don't know even what that is, and who cares anyway. But the challenge is, you know, they can ask Alexa what's the best deposit rate and bang, and move their money straight away. On mortgages, you know, we have our third biggest mortgage provider loses a third of its customers its members every year. So your whole churn is in 3 years. And that's the challenge I see for the industry itself, retention.
I have a point on that. I think it's very interesting, Steve, what you say, because what we see as a trend, the third trend, by the way, is collaboration. And the reason the customer experience comes into discussion here is because, whether we like it or not, financial institutions, large financial institutions, I should mention, they operate in silos. They don't speak between themselves. So you'll have, and I speak again on fraud and financial crime, you'll have cybersecurity don't talk to fraud they don't talk to anti-money laundering, which is financial crime. So the threat is the same. It comes one way or another, right? So whether it's money mule on financial crime and whether it's an attack on cybersecurity, ultimately it's all about stealing money from individuals or from the bank. So what the third trend that we see at a global level is collaboration between these departments. So it started, I think a few years back, it started with organizations, the tier one financial institutions, merging fraud and cyber, what we call the cyber fusion initiatives. And more recently, linking fraud to, and that's because of the money mule problem, linking fraud to anti-money laundering. And today this, again, technology plays a role here because, for instance, we provide a 360 view to financial institutions where we can identify whether this cyber incident evolved into fraud, or is it a money mule, or is it that has implication both in fraud and financial crime fines for the institutions.
But
so, yes.
I will take this to a different direction, if I may, because you speak about it quite rightfully about the cybersecurity, but you were touching the point quite, for me, it resonates with the fact that banks, because they are siloed, and you look at it from a fraud protection perspective, it's also about the fact that because they're siloed, they cannot enjoy the fact that they should bundle services. Because you talk about individual products, right? And as long as you sell an individual product, there will always be someone that will sell it for a cheaper price, will give you a better interest rate. Exactly. Either being a fintech or whatever. You can only succeed when you start bundling services, when you start looking at the customer as an individual and saying, you have a deposit account, you have a credit card, you have an insurance, you have an investment account, trading account, and you have a mortgage. So how do I use all of that information and actually combine it to give you a package that only I can provide to you? Because that's how we link it back to personalization, because the understanding of who you are, the situation in life, helps convert the discussion, convert the relationship to a trusted advisor type of a relationship.
I agree, but most banks can't do that because they were never set up to actually be customer driven, they're account number driven. So I will guarantee that if you bank with a legacy bank, and we have what we call in the UK a single customer view, where the regulator demands you should be able to see the whole relationship. They can't. They can because they've had to put a lot of data things in, but actually they can't do it naturally. It's not in the system.
That's right.
Because everything is account driven, account number driven, not customer driven. Now, all the new entrants, your Monzos, your Starlings, of course they can start to that, and the ones that we build can do that. But what does a traditional bank do to actually try and, you want to create a community of interest. You want that customer to be there, not just for the product, but for the relation. And why? What are you giving me that is more than just purely transactional? Because I agree with you. If it's purely transactional, someone will undercut you or someone will... Yeah.
But I agree with that, and I think it's often you come to these things and people say, it's the technology, it's the legacy tech we've got that's stopping us do this. That's a part of it. The bigger problem is actually the operating model of the businesses. They are designed, financial services have traditionally been built around products.
Different P&Ls.
So you have, this is why the teams don't talk, because they're not organised and motivated and incentivised to work together. So, Monzo isn't great at customer because of the technology. It's great at customer because it's great at customer, and it's deployed the technology to be great at customer. It's kind of hard on the incumbents because that model has worked very well for us in the past, mainly because in insurance a lot of these are mandated products. You don't have a choice. You have to have car insurance, So you don't have to be too customer. But if we want to be more and more relevant in our customers' lives, even in our business, we have to start organising ourselves around customers and working out how we can serve them at the moment of the matter. So it's too easy a cop-out to say the technology is wrong. Technology often isn't, but the technology has probably been there 30 years. The operating model and the culture has probably been there 100, 150 years. And that's the real challenge to break.
Picking up on several things that you guys have just said, what's the trade-off between the customer does not want fraud and is frightened by fraud? And is that a barrier to adoption of a lot of new tech that's out there? There's a question of the feeling of intrusiveness. You can have personalization, but does that mean you're interrogating all aspects of my life that I actually don't want you interrogating? So do we have a dichotomy there that's holding innovation back, or have we solved that problem?
I think trust is the big play in financial services. And I don't think, customers, Admiral's a great brand. We've got great customers, but are we up there with Apple and things like that? Are people passionate about it? No, not so much. And we have to accept that. And do we have the right to be as in my life as Apple is? Probably not. We've got to earn our way into doing that. And we earn our way into doing it by giving more than we're taking. So we have to earn the right by maintaining trust but being relevant to people. And I think if you're looking for the latest, and due respect to the people on the panel, the latest, greatest technology is not necessarily going to come from financial services because it's highly risky. If we make a mistake in insurance or if we make a mistake in banking, the impact on our customers is massive as opposed to in a retail brand.
Well, luckily you've got a panel of young entrepreneurs, FinTech entrepreneurs here.
And that's why I'm delighted to come now. So I don't think we should be beating ourselves up that we have to win the bleeding edge. We need to adopt technologies that are proven and secure to continue to build the trust relationship.
I think on that, I think we've got to understand data better, and because I think everyone talks about AI, again, I go back to banks, legacy banks data isn't very good. You put AI on that just because everyone says you should put AI in it, you'll have a bias going like this. And I think we've got to understand how we, in the financial services industry, use that data, because I do think there is a concern that data will be used to sell more products or do this or more intrusive even. And how do you communicate? We all know that when Monzo launched, there wasn't anyone in London under 35 who didn't have the orange card. It was just, everyone wanted to be part of that community, and that trust was starting to be built up. And I think you have to build trust. And, we do a lot of work in Africa, and let me tell you, no one trusts the banks. They trust the mobile networks perfectly, but they don't trust the banks. And I think, so I think we have to handle data very carefully, because there will be always people who say, well, I don't want to know. But I think for me, the way we're talking here, I have this phrase in my mind, which is more instinctive banking. We've got to use the data to be more instinctive, like social media, a bit more instinctive, not like Google, but a bit more instinctive. Because I think that then can create that community of interest that you're talking about that keeps you and retain customers and cross-sell.
But I feel that we're missing here, because to build trust, you need to create transparency. You need to base it on transparency, and value. What we tend to kind of not be aligned with is the understanding that we just focus on building trust. But to build trust, you first need to be transparent, which banks are not very good at. Fix that means if you tell customers what you use the data, and even the regulation tells you, tell the customer what you're going to use the data for, and allow them to choose. So it's not that they don't want to. They want to know what you're using it for. If you look at Apple, the example that you use, Apple is not the most advanced technology company out there, but they have trust, they have transparency, and they provide value.
Yes.
So they do have the means to achieve that. So it's, again, going back to the question, is it technology or not? It's not. Technology allows us to do more things today than we could do before. You use AI, you use all sorts of different cloud-native type of technology. Things are different than they used to be. It's more about how do you leverage the relationship you have with the customer, being transparent, showing them what their data is used for, but always think about the value. What's in it for them? You understand what's in it for the bank. But if you start bundling services, and as a result, if I use your data to bundle the services, and I do it not because I'm going to sell it to Google, not because I'm going to sell it for advertisement like Google does. I'm going to use it because I want to bring you more value. I want to give you more refined products. Yes. I want to give you a personalized experience. I want to help you get the best product you can get on your credit card, get the best product you can get on your deposit accounts and so forth. That's the transparency element of it. What am I using it for? So there are ways to achieve that.
And I think it has to come from a sort of two-way conversation. I think any sort of 12-month product, be it a telephone, be it an insurance product, you won't hear anything for 9 months of the year, and then when it comes to renewal, you're inundated with it. That's a really weird, and that's not a trustful relationship. No. I would far rather we were in a situation where we were talking to customers throughout the year about their lives, and they were telling us things and we were telling them. Now, entering that dialogue is kind of hard from where we are because it's hard to get excited about. I'd much rather hear about the latest iPhone than I would the latest mortgage or the latest insurance deal. But we've got to find a way to actually talk to customers about things that are relevant, and that's their lives. So the better we can understand their lives and the better we can be relevant in their lives is key. And then we've got to communicate. It has to be an equal relationship. It can't be, you're really important to us now, but not the rest of the year, thanks.
I think, Russell, if I may comment on the trust relationship, I think you're right what you said before, banks, traditional banks, tier one banks, were not very good at being transparent and not very good at opening up to the customers. And this was a problem. I think regulators stepped in. And I'll share some figures with you. We have a $1 trillion problem in scams. And this is very prevalent in the UK. And you probably read in the newspapers, and BBC had a program on Friday on some fintechs and stuff like that. But I think in this country, in 2023, there were £341 million lost to scams. Only 100 million were refunded. So 240 million pounds were lost by people, real people that lost mortgages, lost pension funds, lost a lot of money, right? And the banks did not return that money, did not cover these losses.
Should they?
Now it's regulated.
Of course.
Now it's regulated. So the PSR stepped in and brought regulation where the banks are obliged to split 50-50, the sender and the receiver, payment service provider. And initially it was I think they set a limit at £400,000. They reduced it to £85,000, which I think it's a mistake. We step back. But still, there is regulation that comes in to build that trust between financial institutions and customers.
Don't those regulations simply take away responsibility from the customer to be more savvy and more careful about giving away their data and place the onus upon the financial services industry unfairly?
It does and it doesn't. It does because, you're right, it shares the responsibility with the financial institutions to implement solutions like machine learning and artificial intelligence, to be smarter to learn more about what the hackers are doing. This is not a balanced game here, right? Hackers are winning. Why? Because they have access to the same artificial intelligence and machine learning technologies. They're very smart people. They just choose to make more money than a regulated organization or a company like us, right? So there's more to gain. It's a $1 trillion problem. So when you have this much money to play with, obviously you have more power. They only need to win once. So the APPF, the Authorized Push Payment Fraud Scheme in the UK, is a bad example for the rest of the world, where a lot of people are transacting large, vast amount of money being spoofed by an investor over the phone. These are educated people, right? Educated people that actually choose to make an investment over the phone because the hackers are so smart.
So is it just a case about who's got the biggest AI? Who's going to win? The biggest AI sledgehammer? Is it an arms race between the fraudsters and your industries?
I think it's also educating the market. Means there's a fine line in between overdoing it and underdoing it, right? Because you do want to, and the regulation purpose eventually is to open up the market for competition. It's not built for the purpose of blocking competition. On the contrary, with open banking APIs, the purpose was to open the market for competition, but with certain rules. There's a fine line in between overdoing it and underdoing it. But I think that what we are missing is that there's not enough investment into educating subscribers or customers of the service. We tend to think that people, one of the missing parts of educational knowledge that you see today is financial education. You don't get to study that professionally, not as part of bachelor degree, not as part of your high school studies and so forth. So there's a missing aspect of it, and I think that we don't pay enough attention to the fact that we need to educate people how to use the technology, how to use the channels, how to use the elements that will help them get better services. So it's not just about...
Just on that, I think you also underestimate how well we do as an industry. I think we could do more. Don't forget, regulators, by definition, when they put a regulation in, it's after the event, generally.
Yes.
There's been a cock-up, there's been a mistake, there's been a fraud, cybersecurity, So regulators are... you've probably got fraudsters here, financial services here, and regulators way behind, because that's the nature of regulation. You're never at the forefront of these things. None of the great AI and software developers will go into the regulatory authority. They'll go into fraud. And I do think we need to do more about communication, about cultural change, because we're using technology, and yes, everyone's got smartphones, or have they? We saw an increase in cash usage this year for the first time since COVID. And I think there is a mixed economy, but we have to do more on education on what is secure, what isn't secure. That friction you talked about before as well. But I think the regulator is always behind. They're always behind. And the regulation that comes in generally isn't brilliant for the end user, for the consumer, generally. And it's definitely not very good for smaller banks because of the cost of regulation as a percentage of staff costs is phenomenal now in most banks. And is that actually supporting the end consumer? I'm not convinced on many ways. So I think we shouldn't bash ourselves all the time. The technology we're using, I think, and some of the fintechs that you see, and I think that's the opportunity, because there are fintechs now who are focused on certain parts of the industry, on cybersecurity, on loan origination, on a whole range of different things that you can build an ecosystem around as a bank now, that actually, one, gives you the flexibility and agility that customers want, but also elements of security. And you can plug in and plug out. You don't need a massive IT department to be doing this, because you'll never be able to employ enough people with enough talent to actually keep ahead of the fraudsters. It's an impossibility.
And I totally agree with that. I think as we move forward, we need to be better at partnering, because we're great at our core business. And that means, that's what we should be really good at. We should partner for the bits that we can't do. And then it's understanding who you're going to partner with, on what basis. And I think we'll see more ecosystem plays happening now. I think the sort of view that we have to build everything is gone. And that was probably never a great place to be anyway. So I totally agree. There are some awesome businesses out there tackling specific problems incredibly well, far better than an incumbent bank or insurer could do. And it's about picking those, working with them, creating true meaningful partnerships to provide a better whole.
We've only got 5 minutes left. I was supposed to ask for questions ages ago and completely failed because I got engrossed. There's a gentleman there. We've got a microphone, Julian. Gentleman right at the back.
Can I apologise to this audience?
Yeah,
I can't bend my neck that way. I do apologise. I've just hurt you now.
Sir.
My name's Julian. So when you said a microphone for Julian, I was like, what? I didn't know his name was Julian as well. This question is for Bensi. It's really interesting to see that you work for Amdocs, because I know Amdocs, their core tradition has always been in telco, and before working in banking, I worked 10 years in telco, and I've actually worked with Amdocs before. And when you mentioned about bundling, banks have to look at how they bundle their services to offer to customer instead of having them all separate. I can see that's very core of telecommunications, because that's pretty much you sell a plan that has different types of products to one customer instead of all separate. What other capabilities and trains of thought like that do you see from telco that can come to disrupt the banking industry?
I think it's a great question. Thank you so much. I'll use an example from something that we were planning years ago. Didn't go live, so I can speak about it freely. The intention was to create, in this specific case, is to do what we call cross-product dependencies. So to take a credit card product, which is sold separately, and a deposit account, which is sold separately, but encourage the customer to use the credit card more oftenly by giving them a higher interest rate on their deposits. So the more you use a credit card, the better interest rate you'll get on a deposit account. Actually, creating even tiers. The intention was to create a cross-product dependencies in a way that you control or you encourage a customer's behavior, right? You want to encourage them to use more the credit card, and you give them a benefit, actually comes from a different P&L. It comes from a deposit P&L. It's something that we've been doing for 30 plus years in telecommunication business, and I'll surprise you by saying that we've been doing it also for banking for 20 years, since 2004. It's very powerful because when you speak about personalization, it by definition cannot be product driven. There's no such a thing as personalization through product driven type of an approach. It's all about how do you combine the things together? How do you create these capabilities that are cross product? Now, it doesn't mean necessarily changing your core products. There's actually capability to do it in what we call holding the core, having the technology to sit on top of existing core banking systems, so you can actually have the products instantiated in different core banking systems, being old and new, but still manage the bundling capabilities as a layer that sits on top. And this is what we brought from the telecommunication thought and a way of working into the financial services.
Can I ask an unfair question? Do you think actually we should be encouraging people to spend more to get more? It's a question I have.
I think it's a great question, because if you look at yourself as a trusted advisor of an individual, then you should encourage them to stay within the financial boundaries of their capabilities. You know, I use in this context a different example. Say if a customer asks for a loan, maybe the right advice for them, a loan to buy a car, maybe the right advice for them is to open a deposit account for 4 months, so they have a down payment, so they get a better interest rate on the loan. It is about that. So what we encourage our customers to do is to look at it from a trusted advisor from trusted advisor position, rather than profitability.
Right,
but you can do both.
Yeah.
So, to summarize, in the next couple of years, what in your sectors and your companies maybe, what should we be seeing? What should we have to benefit either an SME or a customer on the street?
Well, I would say it again. I think personalization is a key.
Sure.
In my mind, the way that we've been partnering with fintechs and also working closely with banks, of course, it's the understanding of how do you personalize. And it not necessarily means encouraging to use a credit card more. It's actually the understanding of their lifestyle, understanding their situation in life, and making an advice that fits them, fits their situation. I think that's going to be the face of the future.
Dan, what will change my life in 2 years' time?
I think we all agree here. It's collaboration is the key word here. Yep. Collaboration between banks, fintechs, and payment service providers is the key. I think we all have the same goal: better customer experience, protecting the customers, right, and delivering technologies and services that actually include more people into the banking sector, into the banking arena, as well as making that, the way I see the future is banking as such. I can't put a number to it, but I think it's going to slowly disappear. It's going to become an embedded service. It will be day to day. It will be done from every device. It's very easy today. It's going to become even easier, and I think that can only become through collaboration between fintechs, technology, services, advisory, and financial institutions. And I think if we take traditional banks that are here, and you take the fintechs here, and you take technology companies here, there will be an equilibrium at some point in time where it'll come all in the middle.
In 5 seconds flat, we'll still need legacy banking to deliver that.
Of course, because fintech
Absolutely.
cannot.
Sure.
A fintech will not provide exactly the same services. So everybody has its role, but the experience will, I would say, the experience will be seamless.
Okay, thank you.
Embedded.
Should be, yeah.
Russell, apart from cheaper insurance, please, give me something to look forward to in the next 2 years that FinTech will deliver for us.
I think it'll be more relevant and tailored products and services offered to customers in a way and in a context that's relevant to them and not us. So yeah, I think that's...
And looking at banking from SaaScada.
I'm going to change tack slightly. I think fintechs can support banks actually really getting into the ESG space, climate change. Banks have access to so many people, and when they're doing loans, loan origination, we should be looking at impact. And banks should be doing a hell of a lot more. And I think through fintech collaborations and different cores, you can do that, because I think banks do have a responsibility, a social responsibility as much as a financial.
Well, that harks back to the talk we had, the keynote we had previously, just before this panel on sustainability. And as if these things were planned, we've been talking about personalisation a huge amount on this panel. We're going to take a break for 20 minutes now, but we're back at 12 noon with Nick from Exinity, who's talking about AI-powered personalisation. So how's that? Perfect. Gentlemen on the panel, thank you very much.
Thank you. Thank you.